The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes.
And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your host, Mark Longo from theoptionsinsider.com and co-hosts Mike Tusaw from KnowYourOptionsInc.com and Mark Sebastian from OptionPit.com. The Option Block is brought to you by OptionsXpress. Don't spend time worrying about your broker. At OptionsXpress, security, stability, and account protection are the most important responsibilities to our customers. Secure account access, enhanced financial protection, entrusted with over $7 billion in customer assets, established financial stability. OptionsXpress lets you trade with confidence. Stocks, options, and futures, all in one account. Trade with a specialist. Visit optionsexpress.com/OXradio to open your free account. OptionsXpress is a member of FINRA, SIPC, and NFA.
All right, and welcome back to the Option Block, your bi-weekly source for options, news, and insight and information, and occasionally some fun occurs along the way. My name is Mark Longo from the optionsinsider.com as well as the Options Insider Radio Network, and I am spearheading a truncated, a diminished somewhat, if you will, panel, but still a fun one. It's going to be the Me and T-Nav show today. Mr. Tim Navabi holding down the OX hot seat today. Mr. T-Nav, welcome back to the show, sir.
Hi, Mark. It seems rather intimate here. Just you and I.
Just you and I. Just like the old days, Tim.
Not to go in any certain direction. Not that there's anything wrong with that, but, you know. So, yeah, is it the summer illness that's going around, or?
You know, everyone, there's a little bit of that going on. Of course, the boys at KYO are busy with a bunch of things going on these days, so they're hard to pin down right about now. I know Mr. Kavanaugh is globe hopping, doing a bunch of interesting stuff for the whole KYO and setting up a new home for those guys. And then the boys at Option Pit are running around doing a bunch of different things. So seems like it's just you and I. But speaking of doing interesting things, a little birdie, and his name is Sean Fitzgerald, told me last week that you were off. Was it in Arizona doing some training?
Yeah, I was in Phoenix, Arizona.
This is part of your
Schwab.
This is part of your prep for the Olympic ski team.
Yeah, they've got a great track out there.
Great slalom course in Phoenix.
It's nice there. It's 104. You know,
I don't envy you on that one, sir.
104, no humidity. But, you know, you're walking into the office, you see mountains, and it looks real nice. And, quite an operation down there. I really enjoyed it. I, did some training. And, I just feel better about OX. I feel better about our customers. I feel better about everything, really, having been down there and sort of seeing their operation. I was trying to kind of think about what it was like, and it's like watching Richard Dent on the 85 Bears, they're calling shots. He knows what's going on, what to do next, So it was good. It went real well.
Can you say what you were training, or is that all verboten and very hush-hush?
Yeah, it's a little hush-hush. Nothing major, no earth-moving moves here for myself. I will be at OptionsXpress, but just some general training down there. So it was good. More type of customer relation type of training.
So we can put to rest those rumors that you have been named the heir apparent to Charles Schwab and have indeed changed your name to Chuck Schwab Jr. That is not indeed the case?
No, yeah, that's not the case.
Your hair might be a little bit too bouffant to pull off a Chuck Schwab kind of look. I don't know how well that would suit you, sir.
Yeah, no, I yeah, and dark. My hair is very dark right now, so.
Yeah, but Sean filled in ably for you last week while you and Mr. Grigas were off exploring different environs of the old country. Sean sat in the OX hot seat, and not bad for a first-timer, if I do say so myself.
Yeah, I listen to the shows. I always enjoy listening to our shows and some of your other shows, Volatility Views, and some of those interviews that you had. Sean sounded real good. Sean's a real good trader on our desk. He has a lot of experience. He's good with customers. He's fast. He's very efficient, very productive, and he likes to talk about the markets. I mean, he's always one of the guys on the desk who's kind of walking around looking for trading ideas, kind of see what things are going on, in the markets on the desk. So I'm real glad that he was able to share.
And share he did. I couldn't shut that guy up, which from a hosting perspective is not a bad problem to have.
Yeah, definitely. Yeah, I was wondering about that. He, we had considered him to come onto the show for quite some time, and he was always just a little bit, skittish. I don't know, what am I going to do? What am I going to say? How does it work? And we just kind of had to keep telling him, look, it's not live. It's just talking markets, talking about what you've been seeing on the desk. Your thoughts, what you can contribute to what's going on, in the options world, futures world. So, I'm so glad he took the plunge, and it was good because, John and I weren't here. So, he kind of couldn't back out and say, I just can't do it. He did that before a couple times, but
you forced his hand, huh?
Yeah. I saw him this morning, and, I said, you sounded good. And he said, yeah, I really liked it. And he said, he hopes to come on more.
Well, we'll see what we can do to make that happen when you and John don't want to hold down the OX hot seat. We can find some others who can fill in for you ably. But now, speaking of talking about what's going on, what's trading, what's moving the old markets, let's dive right into the trading block.
The trading block.
All right, that cacophony means it's time for the old trading block. This is indeed the portion of the show where we discuss what's been going on in the day's worth of action on the old street. And it was a little bit busier today than it has been some of the last few recording sessions. I was teasing Sean on the most recent show, I think it was Tim, that he came on 2 days in a row where the S&P closed literally unched 0.0% move, not even a fraction of a percent in any direction. So I attributed that to him. What are the odds of that happening once, let alone twice in a row? It was pretty funny.
I'm with you on that. I mean, it's kind of a sign there, I was like, okay, that's good. You gotta talk about something. And when there's no movement, it's not easy. But if you can survive that, then you can survive anything.
Yes, literally no movement, 0.0. That was quality. But speaking of movements, I don't know what that segue means at all. Let's cut that. I was about to go.
The foul kind?
I was about to go blue with you, sir, but I won't do that. All right. And speaking of,
I hear you go blue every weekend.
All right, and listeners, as we are commencing the old trading block, we are joined here by the old major domo over at optionpit.com, one Mark Sebastian, a.k.a. the Greasy Meatball. How are you today, sir? Twice is indeed the charm today. This is two shows in a row for you, sir, today.
Well, really, it's we're recorded 2 shows, but one comes out today, the other one comes out tomorrow. So to the listening audience, it's like I'm just doing a couple of days. Right?
Yes, exactly. They have no idea that you're actually the hardest working man in show business, sir.
That's absolutely true. 100%.
Well, we are about to dive into the old trading block here, where it was a little bit more action on the old street today than it was all of last week. We saw pretty much pretty much most of the major indices closing down about 1 to 1.5%. S&P closing down about 17 handles to 1308.93, or about 1309. The Dow closed down about 143 to 12,411. The Nasdaq down about 49 handles to about 2810, and the good old VIX cash moving on up like the Jeffersons, up 11% to 2.33 points today to 23.56. So let us begin there, as we are wont to do on the old trading block, where it seems like, and it has certainly been the case over the past few weeks, with the underlying markets have been moving fairly decently, but the true action is in the vol land these days. So, Mr. Sebastian, what were you watching today as the VIX moved to and fro?
Well, I was watching the VIX bottom and then start to head toward, back toward that 27, 28 level, which is where I think it's absolutely going. And not shocked. Think about this. We had that 30-point sell-off, and the VIX rallied, I think, less than it did today. So there is some real fear starting to build in this market on the heels of Greek elections and the euro currency and the whole 9 yards. I mean, it's pretty ugly. Pretty ugly indeed.
Yeah, you're right. It is kind of palpable out there. You can certainly see it on the day when, compared to what we've seen recently, this is a comparably mild sell-off, and yet the VIX is indeed off to the races, and indicating that there is something lurking out there.
Some potential carry-through.
Yes.
I concur.
There's some gyro lurking to the upside, perhaps some souvlaki and some Saganaki upside to be had there in
some souvlaki and Saganaki.
Every time we finish recording the show, I'm starving. I wonder why. It's because all we do is talk about tasty, delicious Greek food here on the show.
That's all you talk about is tasty, delicious Greek food.
Well, it is a recurring theme on the show, regardless of who mentions it.
Talk about poop jokes. There's a difference there.
We do have a listener who wrote in today asking for more more 80s references as well, Mark. So you might have to jump into the fray. I'm assuming that was aimed at you, just perhaps.
Most likely. Don't worry, I'll be here.
All right, Mr. T-Knob, what was lighting up your phone bank today on the old OX desk today?
A little bit of everything. I mean, it seems like most people really took the chance this morning to buy puts. And, they were right. Not too many bullish calls. A lot of people trading.
People bought puts, and they were right.
I love your pithy one-liners there, Mr. T-Knob. You have a gift for wrapping things up in a very succinct way.
Wow. That was just brilliant.
Brilliant, yeah. Very verbose there. And, the commodities. Some people were, getting ready for the grain report tomorrow. People were trading the energies. Not too much in the metals. Well, I was a little surprised. I thought I would get a little bit more on that. But, yeah, so, I mean, as far as commodities, grains and the energies were...
my hairband, the mini metals, noticed that there was, they hadn't gotten calls in a couple of days. And they were wondering, what's the dealio? And... I said, don't worry, you're booked for the Music Fest over on Sheffield. They're following up Hairbangers Ball.
Well, I'm sure they were very happy to hear that. I've seen them panhandling outside the Ogilvy station down here. So I don't think you're doing too great of a job as their manager of late there, Mr.
The Mini Metals or the Hairbangers Ball?
The Mini Metals. I've yet to see Hairbangers Ball. Perhaps they're stealing all their thunder.
Awesome. If you ever want to see... Like, these guys dress exactly like, all the 80s kind of look with, I think they wear wigs and, mesh. It's pretty awesome.
They do a good job.
Yeah, imagine, they're pretty decent. It's very Sebastian Bach-esque.
Well, there was, aside from the hair metal bands, there was a little bit of news going on out there on the old street today. Of course, we had Spain weighing in. That seemed to cause the bulk of the sell-off. People were expecting perhaps a bailout for Spain's creditors over the weekend. That apparently not exactly in the cards, at least not anytime soon. So that, of course, weighing on the old markets. Some interesting news coming out of the JP Morgan side. Of course, analysts love to make some grandiose comments so they get quoted and get a lot of ink about their quote-unquote research. But I think the interesting takeaway about that analyst, I forgot which firm they were with, nor will I mention it to give them a free plug, predicting the quote-unquote unquote upside surprise coming in JP Morgan is that we probably should start learning over the next week or so as the testimony unfolds, and perhaps a little longer, exactly what went into that crazy $2 billion quote unquote hedge that they had on that essentially wiped out their firm or a good part of their profits. People have been speculating for a while, what the heck were they actually up to? What was this quote-unquote hedge that actually cost them over $2 billion, or somewhere between, I think the guesstimates now are between $2 billion and $7 billion, so.
I think 5 is the highest I've heard.
Oh, yeah, I think someone was throwing around 7 the other day, so maybe they just wanted to get ink too, I don't know. But, it's like the day when Facebook took off, and then, of course, I won't name the outlets, but they all had people on who were just spending all day talking garbage about Facebook, of course, because it actually turned out to be prophetic, but just to get the airtime. I'm leery of analysts doing the same thing with these kind of grandiose statements. But yeah, in addition to, hopefully at least we'll find out what the heck went into that quote unquote hedge, so people can start figuring out how exactly they screwed that up and what they started tacking on. I'm guessing they were writing a few contracts here or there into that hedge, just as a little bit of income, just a little bit of fun, a little bit of play to go into that hedge to suddenly cost them between 2 and 7 billion.
There's something between kind of, I think it was duration that got them, right?
Yeah, it looks like a lot of things, some accounting changes, well, that's at least what they're blaming, which of course is an easy scapegoat these days. But yeah, a lot of interesting things went into that, and hopefully we will learn more about the actual structure of those trades in the coming weeks. Of course, there was other news. Too bad Uncle Mike is not here, because he is the man with the Apple plan these days, and of course the guy with the most skin in the game from an Apple perspective. Apple, of course, had their big WWDC, the Worldwide Developers Conference today. Didn't exactly lift the stock. In fact, Apple was down with everybody else about 1.5% today, just further cementing that fact that Apple is now essentially an index in and of itself. It just follows all the other major indices for the most part. But even a day like today, they announced new MacBooks, upgrades to iOS 6, better voice search with Siri, and all these other things. No, couldn't really bump the stock. I thought what was interesting is they confirmed a lot of people have been expecting for a while is that they're switching away from Google Maps in the coming, which of course is going to be a big hit to Google going forward, I believe. A lot of people are doing that. Google, of course, made a change, I believe, when they changed CEOs last year, that all of these different divisions now have to be profitable, aka or self-supporting at least, meaning essentially that they can't just go around giving away everything for free anymore. So they started tacking on somewhat exorbitant fees for Google Maps users, at least people who use a lot of impressions of Google Maps like an Apple. So all of a sudden we're seeing everyone switching to either free alternatives or, in Apple's case, creating their own. And this is down the road could be detrimental for Google, considering they got a lot of essentially free impressions and a lot of free search and a lot of free data coming out of their partnership with all these different firms. So of course, Google selling off like everybody else today, a little bit heavier than everyone else, down about 12 handles or 2.1% to 568.50. Of course, this Google Maps news is not exactly a surprise, but it was finally announced today, so that, of course, weighed on them as well. Anything else catching the eyes of you two guys here today in today's relatively one-sided action?
Not much, no.
Yeah, just sold to you. Apple had a nice range today, almost $20, and the vol is at basically at the lowest level since that January level when it became the screaming buy. So Apple vol starting to look like it's setting up for a purchase.
Uh-oh, don't tell our cohort Don on the Vol Views program that you want to buy premium, buy Vol, because
I know.
I don't think he will approve.
In the words of Don, this is an option that maybe shouldn't be sold.
Yes. Keep your powder dry, perhaps, on Apple Vol going forward, because who knows if all these announcements couldn't lift the name even to close unched on the day, then who knows what's in store for good old AAPL down the road. I think everyone's kind of waiting for that announcement in the fall about the new iPhones and whatnot. That'll be the next big boost for Apple. But next time we have Uncle Mike on the show, we'll have to see what he thinks and what he's got going on. I know he had that back spread. He was trading pretty aggressively over the past few weeks. If he still has that on or if he's moved to something else. But with that speculation, I think we're going to close out the old trading block today and dive right into the odd block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the odd block.
All right, and that funky tune means it's time once again for the old odd block. And we're going to kick things off today with a recurring theme, a recurring name we've talked about quite a few times in the odd block. It's Green Mountain Coffee Roasters, ticker symbol GMCR. They closed today at about $21.32, down about nearly 2 handles or 8% on the day. They usually do about 38,000 contracts a day. Of late, today they did nearly 60,000, so a lot of volume, a lot of downside pressure coming in on good old GMCR. And actually, this is not the first time we talked about GMCR, even this past week. If you listened to the last week's show, I believe it was Thursday's show, Sean, your cohort over there at OX, Tim, was going on about GMCR quite a bit, and he believed he was talking about Starbucks perhaps getting into the K-Cup game and selling their stuff through the Keurig machines. And now it seems like today's news was that the grocery chain Kroger is going to start selling their own private label version of the Keurig cups. So that, of course, not exactly boding well for GMCR. This name has been, well, let's say, a bit of a roller coaster ride of late. Trading last September at a high of around, looks like 116 or so, closing today at a 20 handle. So not exactly a bullish run over the past year for GMCR. And we saw a lot of that extending into today's activity. As you might imagine, a lot of people were gobbling up front month puts here in GMCR, thinking this downturn is not going to pop anytime soon. We saw people gobbling up the June 21 puts. That's where the first initial forays of the day started. We picked up about total on the day of about 4,500, and we saw about 2,500 going up earlier this morning, being purchased for about 53 cents. A lot of that's opening paper, not even 2,000 open interest on that strike. The more dire, the more pessimistic of the bunch were rolling out to the July 17 puts. That's where we saw about 2,000 of those going up as well. Bulk of them purchased with price range around 66 cents or so. Seems to be where the bulk of them shook out for the most part. So a lot of people opening up downside put positions in GMCR today. Of course, not everyone was as dire. There was some activity and some upside calls as well. We saw trading on strikes all the way up to the 30 handle in June even, which is not that much, but still.
If they are smart, they will sell themselves to the nearest bidder now and before this market gets completely inundated.
Exactly. Oh, we didn't mention. Actually, I did mention. So we'll just forget about that part. The about the private label stuff. Yeah.
I mean, they've got the Groupon problem, which is low barrier to entry. Not exactly the same. It's not like they're selling some sort of ridiculously great coffee. It's not intelligentsia. It's Green Mountain. When people look at Green Mountain, they don't sit there and think, oh, this is up there with Starbucks and even Dunkin' Donuts. If you people at Dunkin' Donuts thing and a Green Mountain Coffee Roaster thingy, people usually will probably go for the Dunkin' Donuts. So, it's becoming very, very commoditized, and, there aren't a lot of huge publicly traded coffee companies. Why would there be a lot of huge publicly traded coffee roasting companies other than Starbucks, who actually owns the distribution channel as well?
It's funny you should mention Dunkin' Donuts. I was in one over the weekend. I haven't been in a Dunkin' Donuts in a long time. I have not been in a Dunkin' Donuts. I'm not really a coffee guy, so I don't go getting coffee. And I'm not really a donut guy either, so I don't really go get donuts. But I was in one this weekend picking up coffee for someone, and the first thing I noticed was an enormous rack next to the register full of these K-Cups with Dunkin' Donuts branding on them. So they were pushing that pretty hard in there. So there are a lot of people diving into these K-Cups. Of course, I would imagine if their patent is expiring in September, people are probably going to be diving into the hardware as well and maybe stealing some of their thunder making the machines. So a lot of perhaps not exactly bullish outlook going forward for GMCR, but this seems to be, you're right, a repeating refrain for these guys. We talked about GMCR a number of times in the past. I can't remember the last time we talked about anything bullish with them. So a lot of interesting near-term stuff with these guys, and perhaps they should take your advice, Mr. Sabas, and finally find some greener pastures, a white knight to come in alleviate them of all their issues. Tim, was anybody gobbling up any GMCR puts on the old desk today?
No, but just looking at that chart, longer term chart, I mean, I think this is Widowmaker's little sister. This just used to be a very, very active, an active stock on the desk, and people have just completely left it. A lot of people got hurt. And yeah, I totally agree with what you guys are saying here. So, yeah, not much action on GMCR at all as of lately.
Yeah, I'm guessing a lot of those OX premium sellers got shaken out over the course of this past year of just essentially straight downside for GMCR. You're right, it kind of is a mini Widowmaker. 300 to 60, 100 to 20. They're both fairly dire.
$20 stock, and it still seems a little expensive.
Yeah, that certainly could be. All right, and moving on here in the old odd block to Pitney Bowes, ticker symbol PBI. They closed today at $14.06, down about 1.5%. This is the name that typically does about 5,000 contracts a day. They were pushing 20,000 today, and the bulk of that came on the July 13 puts, the July 13 strike, where we saw a ton of opening paper lighting up the old tape. So July 13 puts, we saw about 18,000 go up total on the day today. So nearly not all 19,000 contracts that went up today in PBI were in this one strike. The bulk of these contracts were sold against previous open interest of about 4,200 contracts. And like we said, the bulk of them were sold for about 20 cents a piece or so. So we're looking at essentially what amounts to a size limit order in the stock here around 1280. So someone's looking to collect some premium and not minding picking up Pitney Bowes at the old 1280 handle here in PBI. This actually plays into a listener question maybe we'll get into a little bit later too about option volume and how that plays into your trading. This guy here, of course, essentially accounting for all of the ADV in Pitney Bowes.
Big put seller?
Yes, size put seller.
Yeah, it's the same customer. He does that every few months, and he's always right.
Well, there you go. Maybe Mark Sebastian following in the tail end of this. Is that last couple hundred lots? Is that you, Mr. Sebastian, following this guy?
That was all me. How did you know?
I know you love to follow the big trades and go in the exact same direction that they go.
That's
pretty much how you've made your name, sir. They call you Mark the Lemming Sebastian.
Yep. Yep, that's me.
But yes, one sizable name. If you look around, there is a lot of open interest in some of these other strikes. There's about 30,000 open on the July 16 puts, 15,000 on the July 17 puts. So this is exactly, like you said, Mr. Sebastian, not exactly a new trade for PBI. And we used to love these guys on the floor because these are the kind of guys you can hang your hat on. These repeat size, one-directional trades. At least when they're coming, what they're up to, and you can trade against and hedge accordingly. So if you're a PBI trader, then your size put seller has struck again. And last but not least, we're going to close out the old odd block today on Focused Media Holding Limited, ticker symbol FMCN. They closed today at $19.42. Down about $1.10 or about 5.5% on the day today. This is the name that does about 6,000, maybe 7,000 contracts a day, and they did about 40,000 today. So that was a pretty sizable day, and the bulk of that, pretty much almost all of that, came in a massive put spread versus calls that went up earlier today. We saw him picking up the 17.5, 12.5 put spread here for about 10,000 times in January. The Jan 12.5, 17.5 put spread 10,000 times for 85 cents. This trader picked up the Jan 12.5, 17.5 put spread 10,000 times, and he lowered his outlay by turning around and hitting 10,000 of the Jan 30 calls, and all of that netted out to a outlay of 85 cents for him. So An interesting three-legged spread, not exactly novel. We've seen this before, financing your put spreads, financing your downside with some upside. But an interesting one. Wouldn't be surprised if this is an underlying holder looking just to protect himself and reduce his outlay for his hedge. But particularly with the long duration of this trade and the structure of it, which is essentially analogous to a collar in many respects. But an interesting one nonetheless. FMCN, another one, has had an interesting range of late. As recently as back in March, they were trading upwards of $30, and now they're trading south of 20. So bit of an interesting range. And to watch this one, of course, this trader seems to be well aware of that range as well, because he's riding on that upside of that 30 handle and picking up the 17.5, 12.5 on the downside. So interesting trade for good old Focus Media Holding Limited. Mr. T-Knob, I'm assuming this one's really hot on the desk these days, really lighting up your phones.
Focus Media? No, not at all. But I mean, it was some time ago. I mean, it's very familiar to me. Just today, I haven't seen anything on Focus Media. So, yeah, I'm, just haven't seen too much.
In case you missed it, Mr. T-Knob, that was...
stock has had a nice little run here, and, it's an interesting little trade, and we'll go. Who knows? This one trades a lot, so that's all I'll say. They're not all winners, folks. They're not all winners.
Not everyone's right.
This is the day of just succinct commentary here on the old option block. Very pithy. We're all very pithy today. All right, and with that delivery of pith, we're going to close out the old odd block and dive right into the Xpress Block.
The Express Block, brought to you by OptionsXpress. OptionsXpress lets you trade where and when you want for every level of trading. From advanced charting, free daily trading ideas, and free educational resources, OptionsXpress is the online broker for all traders. Best of all, OptionsXpress allows you to trade stocks, options, and futures all in a single account on powerful yet easy-to-use trading platforms, including mobile devices. Visit optionsexpress.com/OXradio for your free account. OptionsXpress is a member of FINRA, SIPC, and NFA.
All right, Mr. T-Knob, I know it's been a while since you've done this, but do you think you remember how to do the old Express Block?
Yeah, I think I got something here for you.
All right, sir, then take it away, Mr. T-Knob.
All right, just kind of wanted to go over what was active here at OptionsXpress. Apple was, our most heavily traded stock today, followed by SPY, SPX, GLD, the Qs, RUT, IWM, and then Bank of America. So those were some of the actives there. As I mentioned before, there is a grain report out tomorrow. It is the USDA supply and demand and crop production reports. It's going to be the first time that the grains will actually be trading as this report comes out. So kind of like I always say here, be prepared. If you are trading grains, just remember essentially 7:30 Central Time is when that report comes out. So there'll probably be a lot of volatility then if you notice the chart's moving a lot.
I'd imagine those markets will be a tad wide going into that report, just perhaps.
Exactly. Yes. Thank you. And then another issue that I see often here at the desk happen today that I just kind of wanted to bring up and talk about, where, somebody was asking me to walk them through a stop on a spread. And, I kind of had to explain to him, what are the risks on doing that? And the risks are really that you're going to get stopped out early. And it's not necessarily because there's an actual trade on the spread that's going to stop you out. But on a Monday morning, on a Friday afternoon, when the volatility in the stock gets big, you're going to have these options really moving around. In the case of Monday mornings, sometimes the bid asks just get real wide. So you're going to have a real wide bid ask spread on the spread itself, and that has a tendency to knock people out. And then they'll always call up saying, hey, what happened here? So, I kind of had to explain that to him. He said, well, what do I do? And I said, well, these were debit spreads. And I said, really, your risk is the amount of money that you paid for the spread, why not choose a spread where you know what your risk is right away, or what you're satisfied with as a risk. That way, you don't really have to think about, okay, putting on a stop, but just really, if you don't want to lose more than, $200 on a trade, just go ahead and find a spread that'll cost you $200. So, we see that a lot. And, I just kind of wanted to let people know, what the risks are on that.
It gets into the voodoo yet again that is spread execution. So many of these customers out there, they still, and not entirely to their fault, because it is so kind of opaque these days, the rules and the way spreads are executed and the way the different spread books on the different exchange operates and the way the different brokers handle these orders. It is a confusing thing if you're coming to this for the first time, or even if you've been around for a while, just comparing the different products and the different brokers and the different exchanges. It can really, you almost need a spreadsheet to keep track.
Mm-hmm. The other thing you can do on that is, I told him to pick a level, really, of the stock that he wouldn't want to be owning that spread, because that's a much easier trade to make, on a contingent order. Hey, if the stock drops below this level, sell this spread. The other choice really is he could put the stop on the spread, but instead of use a market order, maybe put in a limit at that stop price. But then again, kind of your risk is essentially that you may not get filled if it just kind of heads in one direction. And, there was another spread issue that we had where, a customer was trading a three-legged spread and it was a 5-3-1. And he kept saying, hey, my bid is at the ask and I'm not getting filled. What's the problem? And, I told him, I said, hey, essentially you have to increase your price, make it attractive enough, that somebody will want to sell it to you.
Tim, that was actually my nickname in college. They called me the three-legged spread. I don't know if you knew that.
The nickname in college, that's always one of my favorites. But anyways, I told him, I said, really what you're asking to do is someone to trade, a 5-3-1 with you, and I'll be honest with you, I don't see it much here on our desk. So, you're dealing with, somebody that's a little bit more experienced, or, market maker, that, is going to want to do that. So again, you kind of have to increase your price. Just, it's not a 1x1 or a 2x2. That's another issue that you may have on spreads. So, again, just spread trading, got to be aware of what you're doing. What the risks are. Don't hesitate to call the desk, ask questions. We'll always kind of help you out and walk you through these things.
Good advice as always, Mr. Tina.
Yeah, that's a great point. A lot of traders don't understand how spread trading actually works, and the order in which what spreads are easier to fill. The more complex and odd the spread, the more difficult it's going to be to fill as a spread trade. That's almost always the case.
Yeah, I mean, it's one of our more often questions. Hey, I've got the spread in, I'm doing it at the bid or at the ask, and I'm not getting filled. What's the issue? It's just, again, I think you phrased it perfectly. The more complicated the spread, the more difficult it would be to get it filled. So, you have to make it attractive for them to trade with you. It's usually increasing your price or decreasing your price.
You got to juice up those market makers sometimes. Yeah, they're not exactly quick to jump on the, let's say, the 5x3s by ones.
Well, they're not running a charity business. They're running, they got to pay, they got mouths to feed, namely their own.
Yeah, and also, those trades come in, they're automatically assuming that it's probably another BD and that it's probably pick-off paper, so they're even doubly hesitant to fill you on those. So always good to incentivize the market makers whenever possible. But now that is going to do it for the old Express block, and now we're going to dive right into the mail block.
Now it's time to empty the mailbag and see what our listeners have to say. It's the mail block.
All right, and welcome to the mail block. This is where you, the listener, gets to sound off on the old show. And today We have an email question from Sean Robinson. He writes, what role does option volume play in your overall trading? For example, I'm thinking about selling 50 to 100 puts in a name that only trades about 400 contracts a day. Should I be concerned about unwinding that position when the time comes? Thanks, and please make more 80s references during the show. Well, Mark, that last comment is clearly aimed at you, so perhaps I will give you the pride of place to answer this one first. What do you think about what Mr. Sean Robinson here has to say about ADV and
well,
trading?
I think he brings up a good point. It's kind of like going, it's, I'm trying to think of a really good 80s reference.
He's put you on the spot now.
Yeah, well, it's like going to the big, huge college party in 16 Candles, but nobody's there to party, and you're stuck with all this beer that you have to finish before your parents get home. And that could be a major, major problem. Yeah, I think that you have to be very aware of what open interest and daily volume is, certainly open interest, in order to get, when you're trying to fill a trade. It is very hard to get, or just be aware that it's going to cost you 10 cents to get out on the trade and 10 cents to get the trade off. If you think the trade is so good that you can afford to give up 20 cents, then by all means, go ahead. But if not, then don't do the trade. That's what I would say.
Yeah, this is pretty much analogous to the question we had a few weeks ago about open interest and how that should impact your trading. This is the other side of that coin, of course, average daily volume or total volume. And as we discussed in the open interest comment, it really should play out. I mean, these are factors you should consider. Obviously, don't go into a trade like this unaware that you're trading a completely illiquid name. But at the end of the day, what Mark said is correct in that it's going to be played out in the spread. Whatever is happening in the volume, whatever is going on in the open interest is going to be played out in that spread. So if the spread is extremely wide, you're trading in a liquid name, and as Mark said, it's going to cost you to get in, it's going to cost you to get out. And so as long as you're aware of that and cognizant of that going in, then you should be okay and aware of what that cost of execution is going to be. Don't go in blindly to these things. But on the flip side, if you're trading in a liquid name, but for some reason it's very tight and the markets are very tight and a lot of size displayed, I don't think that's very common, but if that is the case, then by all means, dive in and enjoy. Just be aware of the risks of taking these things off. I wish he mentioned what underlying he was talking about. We can give him more clear and concise advice, but for now we'll just stay general and say, by all means, be aware of the execution costs of those trades.
Yeah, maybe he'll end up being an odd block one of these days. What do you think about that?
There we go. Maybe that's him. Maybe that's him doing those 19,000 puts that we just talked about.
There you go.
In the name, what was that? That was in Pitney Bowes. That was him doing all about 20,000 of their 20,000 ADV. So hopefully. I guess he didn't wait for our answer before he traded. So unfortunate.
I was going to, I was going to say a few things. First of all, I don't see anything wrong with making a trade that he wants to make here. I do agree with you. How important is it to you to get out? That's really where it's going to cost you. If it's not very important, then hey, you got what you want. Now go put it out for sale. The other issue I was going to say was, there are two issues here. One would be, if this is 100% of your trading account, maybe not a very good idea. But again, if it's just a smaller percentage, again, it's what you want. If you're right, you're right. Hey, you did it. Nice job. And then finally, I was going to say, what about the exercise and close choice? Have you guys thought about that? I mean, if he's right and, he catches a good move in the stock and he's got these options and he may not necessarily, have the liquidity in the option market to offset it. You guys think that, doing an exercise and close?
Well, there's obviously a cost to that, of course. It depends when he does it. Obviously, if he does it close to expiration, it won't be that big of a hit, but he's losing all of that time premium. Depends obviously which side of the fence he's coming in on. But he's right. He's talking about selling contracts here. But I mean, that's pretty much a last resort, I would think, in my mind.
Yeah, I mean, we do see that. A lot of times people just don't understand the time premium that they're losing. But again, I think it kind of goes back to, how important is it for you to get out, or how much are you willing to pay to get out? And even if you can't get out with that time premium still, you still may have enough of a move where you can say, okay, that's fine. I'll take it anyways and just, liquidate.
I guess if it's going to cost you 7 cents in time premium and the spread is 10 cents wide, I guess that's a good trade. Go crazy. That's not something I would traditionally do, but it's an interesting suggestion. I think for names like this where you have so few options, pun intended, that might be a trade of last resort that you might want to consider. Speaking of, let's wrap up here the old mail block. But we mentioned the last question from Sean didn't mention the underlying. So here's a quick Twitter one that goes straight to the heart of the beast. Talk about being pithy here. Twitter question from Spy16. He says, "What do you guys think about selling the Facebook July 23 puts for 70 cents? Yay or nay?" Mark, you went first last time, so I'll go first this time. I'll just say nay because I'm not comfortable telling anyone to go out and blast puts in Facebook. I don't know anything about what this guy's trading or what he's doing, nor do I know exactly where the bottom is in Facebook. So I'm going to go on the nay side of that equation. What say you, Mr. T-Nav?
I would say that if he doesn't mind owning the stock at 23, hey,
Oh, what a comfortable answer for you, sir. No,
if the stock's at 10 and he doesn't mind owning it at 23 and that's what he wants, then do it. But yeah, understand the risks. What are you doing? Well, you're going long, at 23.
Mr. Sebastian, coming in the middle somehow, and then that will be a perfect range of answers for this person.
I would sell the bananas out of that. That doesn't get any better. All right. No, I don't know. What valuation does 23 put Facebook at? If it's, I think that's below $50 billion, and I think, the Apple deal today, kind of good for Facebook. Sure, sold. I'll sell with.
There you go. Two for one on that one. 2 versus 1, perhaps. Some degenerate premium sellers lining up here in the old mail block in Facebook. But that is going to close out the mail block, and now we're going to dive right into Around the Block.
Around the Block.
All right, and welcome to Around the Block, and this is, of course, where we talk about what's coming up on our own collective screens. We talked about Greece and Spain earlier on the program, and that, of course, still remains the key drivers. On the domestic front, we have some interesting numbers coming out this week. On the 13th, we have PPI, of course, retail sales. 14th, CPI and jobless claims, and the 15th, we have a bunch of stuff, of course, culminating in the love that is the triple witching this Friday, Expiration. So, Tim, I know you'll be in nice and bright and early Friday morning, right?
Yeah, definitely. Always one of my favorite days, triple witching.
Of course, with weeklies now and perhaps dailies on the horizon sometime down the road, the notion, I think, of Expiration Friday is going to be quaint.
And I just kind of want to remind people not to call the trading desk to offload your E-mini S&Ps for June when the market opens at 8:30, and that's because they are expired by then. So I had a couple calls today where people were saying, "Yeah, I'm thinking about buying some of these June E-mini options," and I said, "Well, no problem." He said, "It expires Friday." I said, "Yeah, 8:30 in the morning." He said, "Oh," so just be aware of that.
Always good to know the vagaries of the products that you actually want to trade.
Be prepared.
A common refrain, a common tip we give out here on the old option block. Mr. Sebastian, aside from Greece, aside from Spain, aside from VIX, slowly rallying towards 30, what else is on your horizon?
Like I said, Apple Vol just hit lowest level since it kind of bottomed out last January. I think it's starting to look like a huge scoop and could signal something. So that could be something that I might be really interested in.
Scooping Apple going into the long summer doldrums ahead, or scooping Apple Vol, I should say, going into the long summer doldrums, waiting for perhaps the iPhone to save them from their malaise of late. All right. And Mr. Tina, what else are you watching here around the block, aside from the E-mini futures? Anything else catching your eye?
Just a lot of the news, a lot of the numbers that you had mentioned, the PPI, the CPI, retail sales, we have that grain report. And again, kind of, what's the news going to come out on this bailout? So we'll see.
Yes, a whole lot of unknown unknowns or I should say, a whole lot of known unknowns lurking in the not too distant future. So we'll have to wait for those.
I heard this on a show, so I can't really take credit for it, but I hope it's not too crude for you. Someone said, bailouts right now, they're about as popular as a hemorrhoid. So that bail is hysterical.
Given the very
but the thing is that like a hemorrhoid, you have to treat it.
You gotta treat it right.
Otherwise, it fests and gets infected.
Given the myriad Sebastian uncomfortable analogies we've had on this show in the past, that one actually is relatively tame by comparison, I think so. Our listeners will be able to handle that one.
Yeah, you know what, listeners? Send us a good email, and we'll invite you to listen to the show live, and you can catch all of the stuff that Kyle has to cut.
Yes, we haven't done the live audience in a while. The live listening audience, I should say, on the show.
We'll pick, let's say, 3 really good listener emails and invite them to listen to the show live.
That sounds like a plan. So if you want to get in on this and see all the fun behind-the-scenes action, perhaps win some fun prizes, then by all means, send us some fun emails, and we'll invite you to be on the show virtually. All right, and that is going to do it for Around the Block. That's also going to do it for this episode of the Option Block. I, of course, want to thank my cohorts here for joining me on the truncated all-star panel today. Starting off with you, Mr. Seabass. What is coming up in the land of the pit?
Well, we've got a webinar on the weekly options this Wednesday evening. And, of course, my book. We've got my book that came out last week. It's the #1 options book on Amazon. The Kindle is, and then the hardcover is doing great as well. It actually comes with a free 1 month of my Option Pit live service, and it's a really great, which costs $125. So if you consider that the book is $30 and Option Pit Live is $125, it's a pretty good investment if you ask me, and absolutely worth the read.
Go for it. I don't know much about this book, so it's not like I could personally endorse it or anything like that.
Oh, wait. And to make matters better, there's a personal endorsement. So, it's been endorsed by Tony Batista, Russell Rhodes, Jeff Ogden, and, of course, Mark Longo. I think it's a really valuable piece of information. It was written by myself and a guy who actually runs a hedge fund. So it's not some jamokes, I would say.
All right, and if you'd like me to read it in my own voice, here is my back of the book plug for Mr. Sebastian's book. I wrote, from trade selection to execution, risk mitigation, and volatility analysis, everything you need to know is contained within these pages. Whether you are a newcomer to the options market or a seasoned options veteran, the insight and analysis contained in this book will provide you with the proper framework for your options trading. And that's because Mark was kind enough to share with me the early proofs of his book.
Wow.
And I caught all of his typos and made a few suggestions.
It sounds so much better when you read it than when I read it.
That's what you get when you sit in the big chair, sir. You get that nice deep baritone. Plus, I have a few filters on the microphone to make it sound that much more Barry White. I hit the Barry White button, and it all just goes from there. All right, sir. Well, I'm glad to hear the book is doing well. We'll look forward to the Mark and Dennis roadshow for the book, where you get to do all your signings, and you could have all your lady fans come to the shows, and you could sign the books for them. All right.
Oh, absolutely. Well, that's only if Tim Navabi comes too.
Yes, that's true. If you have Tim coming, then you'll have the ladies. I mean, they can't resist that bouffant duo. Of course, I shouldn't make that joke anymore now that he is a nice married man. You joined the club, sir.
That, and I got the summer cut, so
Oh, did you? Oh, well.
I did, yeah.
Then the bouffant duo is no more, ladies. I'm sorry to say. I'm not sure if there'll be more broken up about that or the fact that you're married. I don't know, Tim. We'll have to see. But Tim, while we have you here on the old hot seat, what is coming up in the land of OX that may intrigue our listeners?
Okay, I had a couple calls on this today, and what do you know? All of a sudden, we got some webinars on this. On June 13th, 3 o'clock Eastern, we have a webinar on understanding theta. And on the 20th, we have one, the 27th, it's understanding gamma. So, those are 2 good webinars. I know I got a list earlier today of some live workshops. Unfortunately, I didn't bring that list with me, but, go ahead and call our trading desk and, see if we're in the area.
All right, thank you for that, Mr. T-Knob, and that is going to do it for this episode of the Option Block. Of course, we want to thank all of you out there for downloading and streaming and subscribing to this program and making it such a success, and we'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved. The preceding program was a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com/radio or search for Options Insider Radio in iTunes.